In today's video, we're going to talk about some changes that insurance companies have made to where they are actually increasing, doubling the monthly payments that they require for auto insurance, home insurance, for renter's insurance. You got to listen and watch this video. This is very important because it's going to be another way that they could take more money out of your pocket if you are not aware of this. Maybe it's already happening to you. And then I'm going to tell you about an experience that I had with a vendor who told us to try something with one of my companies utilizing AI. Now we've heard about AI with all the different ways that people are talking about using it, but I think that's something that's going under the radar that people do not even pay too much attention to, but it has happened in another country, and I'm going to talk about it on how it's here. It is here, and I think that this is very scary. I think that this is very scary, the way that this is being utilized. And I'm going to go into that too. So right now, like this video, right now, I need you to hit the notification bell because we want to get the views up for the channel. This is just the way this whole channel stuff works here on YouTube. You know my stuff is good, and people don't even report it to you this way. Not to say that I'm the best on here, but I think that I'm pretty good with what I do. Okay, we recently had a credit repair client that contacted us. Credit repair process is going good, but something had happened. This customer was renewing her insurance, and it was for her car insurance. She was like, I've been with these people for I think she said 10 or 15 years. It's been a long period of time. A long period of time paying this car insurance company. And you know how they'll re-rate you. You know, if you got the accident, of course. If you got tickets, of course, they're going to re-rate you. And so she said they doubled her rate. And I was like, I told my employee, I said, she got to have had some tickets. She had to have something. I'm that logical. I run that logical path. Okay, it's got to, no matter what, even if she didn't do nothing, it's going to be something, some reason. And so no tickets. She did have her daughter on there. And I said, well, how old is the daughter? Her daughter was at an age, and that was pretty good. But that, of older age, because if you're in your 20s, the rates are gonna be jumping when you have somebody that's younger on there, on your car insurance. And so asking all the questions, we take her word that their driving record is good. She was like, I swear, driving record is good for both her and her daughter. And but they just jumped the rate. And I said, okay, well then if they jumped your rate, they have to give you a reasoning. And usually when we ask that question about, because if you get denied credit, they have to give you this sheet to say why they denied you. And I was like, get the sheet. And she was like, okay, I'm gonna send the sheet. So now, let me share with you. Here's the sheet. Got the proof right here. Got it in yellow. This is what they put on the sheet. And this is what's concerning to me, because you are probably already under a lot of strain and stress with managing your debt. And now if you go to renew your auto insurance, or they just jump your rates, say, hey, if you're going to renew for another cycle, this is going to be your new rate. This is what they sent on the reasons why they increased her rate. And just to let you know, she has had issues with her credit for years, and she had just came to us to start working on her credit. But this is what they put on there. It said that there's been delinquencies, and they're saying that the optimal value is no delinquencies. So if you're delinquent on other credit that you have, on other credit, This is something that only credit card companies were able to do because they had open accounts. So somewhere the law has changed. Somewhere the law has changed to allow insurance companies to not only rate the risk based on your driving record, but also on these types of things that are happening on your credit report. So they want no delinquencies. They said they want zero delinquencies on your credit reports. That's one way that they can go ahead and jack your rates up. The next one, inquiries. Inquiries. An insurance company is upset and wants to jack your rates because of inquiries. Have you ever thought about that? So now you watch, these other videos talking about go get these credit cards, the Apple card, whatever other card that they got out there with the Navy Fed and the Penn Fed and all of those. And then you get your re-rate your insurance and they say, well, you had inquiries. And it said that she had 6 inquiries initiated. And it said the optimal value is no inquiries. They want you to have no inquiries. The next one is they said utilization of bank revolving accounts verified over the last 12 months between 80 to 89%. The optimal score. The only way you could have this optimal score is if you paid off your cards or you have 1%. It says here, you don't believe me. You don't believe me. You don't believe me. You don't believe me. But you're going to believe it now. Look at that. That might be in reverse, so I don't know if you can read it. It says here, utilization of open revolving accounts verified in the last 12 months is 80 to 89%. You can be at 80 to 89% and still pay your bills and still never be late on those. You can be at 80 to 89%. We tell you to be at 30% on the balance that you carry over month to month. That shows that your utilization rate is low and it'll help your scores. But this insurance provider is saying that they want the optimal utilization rate of 1%. 1%. And they say they want 0%. 0%. So if they want you to be where you pay off your credit cards every month and then you'll get the best rate from them. The next one is 10 or more accounts that are past due or in worse status, excluding bankruptcies because I guess bankruptcies are not counting because it's discharge, but the optimum value is none in 90 days past due. So they're rating people for insurance rates based off of this here. And I'm pretty sure that this is with other companies that are out there. So you damn near have to be perfect driving, and now you got to be perfect with your score, with your credit reports, and you got to be perfect with the way that you do your utilization, perfect with your inquiries, perfect with not having any late payments. I mean, this is crazy. This is like just giving them a present to say, we can jack your rates up even if you do make your payments, even if you do have a good driving record, that they could just, we could still increase your rates. So somewhere in the law, so I'm going to be doing my research, somewhere in the law, they have allowed insurance companies to even have more filter. These are what's called, quote, filters. Like even people who work for loan companies don't even know about filters. Filters are what the criteria that a lender, and now we always had them for insurance companies, but it was mainly based off of your driving record. So now they're basing this stuff off of your driving record, and they're basing it off of the way that you manage your life. that you manage your life. Now, all in all of it is important. I don't agree with this utilization and all of that stuff that they have. But all in all, yes, you got to run your life like it's a business. You got to run your finances like it's a business, even though you may not have a business. You got to run it that way. And we all got to know what's being set up against us, because these companies, what they try to do, that's why I say you got to watch out. Even if you have excellent credit, watch out about getting all of these credit cards and stuff, because what they do is they try to set the game for you to make mistakes. Even if you are making your payments and doing everything, this whole game that they're setting up with the insurance company is setting it up for them to be able to make money from you, even though you didn't make any mistakes. You're paying all your payments. Maybe you had a couple of inquiries because you were looking at getting a business loan, or maybe you had an inquiry because you're getting ready to buy an investment property, or you're about to move into another property. Do they count their inquiry as an inquiry too? This whole thing, this is crazy. So I'm going to do another video on this. I'm going to do my research and find out more about this. So now this loops us into this AI. And if you're still here, please like this video if you haven't done this, and subscribe to my channel. This AI report. Now, we've seen where you could utilize AI to make a book report, utilize AI to repair your credit, you utilize AI to do all of this stuff. But let me tell you what a vendor came to us and they demonstrated what AI is doing to customers. Because you don't care really about me, you care about what is happening to you. So let me tell you something that is happening to you. And I saw this demonstration live. They are coming to companies with this AI, and they will tell you, give them the name, give them the phone number, whatever data you have on someone that you're looking to do business with potentially, and they will tell you if everything about that person. Now, you're probably thinking, well, that's a credit report or something. No. They're talking about in a way, to be bottom line, they're saying this is the attitude of that individual. Now, when I opened up the video, I said there was another country that was doing something like what I just said, and it's China. Remember, they said they had that social credit score. A social credit score. And what has been found is that some people, regardless of what they've done, it seems like that they're being blocked out of all types of opportunities, being blocked out of where it just like a business doesn't even want to deal with them. Imagine if, and this was for, just so it's not overboard on the way that I'm explaining it. The way that this was presented to us was it's a report based off of a model of the experience with a group of companies that dealt with an individual. So they gave us a report from an individual. So just to tell you, so I can kind of the spoiler here, spoiler alert. The AI system said, don't do business with this person. Said, do not let this person do business with you. But the thing is, this is how it felt different than using like a report. Because with my other companies, we will look at business owners, personal and business credit, to see if we'll extend them credit to do business with my advertising company. And we've had people who have ran ads and then they ran off, like we couldn't even find them. But what this AI report did is it said, you can look at the credit reports of these individuals, business credit and personal credit, but we're going to give you a social report. And the social report that it gave us was, you don't want to deal with this person because this person had did these things dealing with other companies. Like, imagine, now, like we have reviews. You can write a review about me. You can write a review about your experience with a restaurant. People see them. People have always wondered why there's a 5-star review here and then a 1-star there. Like what was the difference in there? And I'm always like, it's just people. This is what's the difference, and it's like it came together. I'm a universal person. This just came to my mind because I've always thought, how can someone have a 5-star review with the same company and then down below you got 1-star review? I actually saw that. I was doing some research on that, and I saw with Tony Robbins. I was like, who could have a bad review about Tony Robbins? And I had saw a whole bunch where it was like thousands of 5-star and like 3 to 5-star thousands. And then there was 1-star reviews. And, logically you'll be like, well, maybe an employee or just something. There was something, but this here brings it all together with this AI report that I got. And again, this AI report said, this individual you should not do business with. It was like a friend saying, Steve. Well, they said it to my employee because I said, here, check this out and see what you think. My employee reported back to me and said, we will not do business with this person. And here's the reason, here's the report, here's the reason why. And it was based off of experiences that are reported from the other businesses that dealt with that person. So what this does is it takes the side from the review side and it completes a full circle, because you have to be, if I'm thinking it, you have to be thinking it. If someone could put a 5-star review and someone put a 1-star review, there has to be something that was different. And what they had I had saw out there is that they had, business owners and people were they'll put down what happened with that client. Like, that's what we would do. We would say, if someone didn't like doing stuff with credit repair shop, like they had a bad experience, it was either one of my employees dropped the ball, and I have let employees go off of dropping too many balls. Of course, nobody's perfect. You're not perfect at your business. Are you the CEO of your company? So that means that they don't consider you being perfect. They consider you doing your job good. And have you ever messed up with your job? Nobody's perfect. We've all done that. Or it's been where the individual, like, they just did not want to follow through with the process. It's like, you got to get updates on the reports. You got to get information to us. We got to be able to have access to the information. Some people don't want to follow through with that process. I would think that those would be the middle people. But then the bottom people are the people where there's settlements. And if you watched any of my videos, I say that we have a credit repair process using the 8-point validation process, and then we have a 2-phase settlement process. Some people, when it gets to that 2-phase settlement process, they just back out. And it's like, we can't get you from A to Z without that settlement process. And that's where it would fall down. So we would, if someone put a bad review, we would just put, this was what that experience was with that individual. They didn't want to follow this process. What someone has done, I don't know who has actually put this together, but it was presented to us by another vendor, but I don't think that they put it together. I think that they're just selling the service, is that they're giving businesses the other side. So what is happening now is that businesses will have a choice to not deal with people who have a consistent negative experience with other companies, either similar or just period other companies. Because one thing that we know is that if a person is negative, they're going to be negative regardless. They could be sitting there eating a meal with you and you had the same thing and you sitting there eating your stuff up and they say they didn't like that. I saw a video where there was a restaurant owner and the lady was saying, I don't want to pay for the food because I didn't like it. And she was still eating while she was talking to the owner of the restaurant. She was saying, I don't like the food. I don't think I need to pay for it. And she put her fork and was still eating. that restaurant owner will be able to put that experience into that AI report, and you will be building a social score about an individual. And for me, I guess because sometimes when things are new, I I have an open mind about a lot of stuff. But sometimes with stuff, I guess I have to wrap my mind around it. I can see the benefits for business, but I can see the disadvantages that it could put people in. People could actually go to try to do business with someone and they could be turned down and they could be like, why? I got everything. But that company could have the choice to not do business with you. And we can see with our political environment right now, we see that people that are LGBTQ, I think that was the right way. I don't want to offend anybody on that, but that's the way. Um, I don't want to have to service them because of that. What goes around, what goes around seems to could potentially come around because people could say, and businesses could say, they don't want to do business with them. This is incredible. All right. If you need help with your credit, please visit us at creditrepairshop.com. Watch video what makes us different. Post your questions and comments. I'm very interested in what you think about this. If you need your credit reports and scores, go to the website your3scores.com. Grab your TransUnion, Equifax, Experian credit reports and all 3 scores. If you have debt collectors coming after you, grab my 3-pack of letters, statute of limitations letter for debt that is past the legal statute of limitations to collect, my cease and desist collection activities letter, and debt validation letter. Thank you for your time. This is Stephen A. Williams, president and founder of thecreditrepairshop.com.